Hello, everyone. My name is Chris Mott, and I'm the head of growth here at Merchant Spring. I wanted to thank you all for joining us for this joint webinar, VAT Accounting for e-commerce. Merchant Spring helps agencies and aggregators and e-commerce accountants gain deep insights into a variety of performance metrics across their client portfolio. But that being said, this conversation deserves subject matter expertise that I don't have. So I've invited a couple partners to speak to you today around all things VAT for e-commerce sellers. So first we have Steve Blackmore here from Elver eCommerce. Steve is the director of Elver eCommerce Accountants and has 35 years of experience. He currently provides accountancy and taxation services to around 100 e-commerce clients, which range in size from small startups to up to $10 million turnover multi-channel international sellers. A fun fact about Steve is in his youth, he co-wrote a punk fanzine, which has been featured in a New York exhibition on punk memorabilia in the book titled We Are the Writing on the Wall, 10 Years of British Punk, 1976, 1985. Also, we have Elspeth Cordray from A2X. Now, Elspeth has been an e-commerce bookkeeper since 2009 and has a special interest in EU VAT for e-commerce and accounting software integrations as well. So she joined the team at A2X in 2019, and she's been leading a diverse and creative customer success team since 2021. And in her spare time, she enjoys reading crime novels, adventuring around the English countryside with a small tribe of little people. That being said, I want to pass the mic over to Elspeth to talk about the basics and recent changes to VAT. And before I do that, let me just mention in this disclaimer that this webinar does not constitute professional advice. And with that, let me hand it over to Elspeth.
Hi, everyone. It's great to be here today. I'm really excited to be here on behalf of A2X. And thanks, Chris, for the opportunity. And also excited to be here with Steve, who's a real expert when it comes to VAT. Now, some of you may be really familiar with VAT. You've been selling for a long time, and others of you may just be starting. And so what we're going to try and do in this webinar is cover quite a lot of different topics around EU VAT. We're going to start with the basics, and then we're going to progress on. And I think Steve is going to answer some of the more complex questions a little bit later on in this webinar. So first of all, we will start with the basics of VAT. Okay, so VAT, value added tax, is a consumption tax which is collected across the UK and the EU. The amount collected is assessed based on the value added to those goods and services, and it can be added at different points in the process. Online sellers who want to sell in the UK and who want to sell across the EU do need to be aware of their VAT obligations. It's really important. UK sellers have to register for VAT in the UK when they reach a turnover of more than 85,000. And non-UK sellers often need to register straight away. Once they're registered, sellers then are required to collect VAT on sales, but can also often reclaim the VAT on purchases that they make for the business. EU-based businesses must now register to complete an EU VAT OneStop Shop return once they exceed 10,000 euros in cross-border B2C sales in the EU. Now, it's really important. VAT is really important if you want to sell in the EU. Staying informed and up to date on the latest legislation can help you remain compliant, but it also can help you be really smart about your tax liability, where you do need to remit the VAT and where sometimes you don't need to because maybe the online marketplace has already done it for you. And we're going to talk about that a bit further on in this webinar. Now, there's been lots of changes in the last 15 months approximately. Obviously, first of all, for UK sellers, we had Brexit. We had the end of the EC sales list, which some of you may be familiar with from previous to Brexit. We had a change in how sales to the EU are treated if you're selling from the UK to the EU. We still have retained the reverse charge mechanism on services, and that is important, especially if you're selling on Shopify or Amazon, because you'll often find that many of those fees are reverse charge expenses. And then hot on the heels of Brexit, we had the new EU VAT package that was introduced on the 1st of July in 2021. Really big change for EU VAT. Along with that came some new requirements for certain online marketplaces to collect and remit VAT on behalf of sellers in certain circumstances. It's really helpful to know what those circumstances are and how that applies to your own online selling. And sellers can now opt to submit a one-stop shop return for EU sales if they want to. And that's been a really big help for EU sellers. Once they got their head around it, I think we're starting to realise that this is actually a really positive change if you want to sell in the EU. I'm going to hand over to Steve now, who's going to talk to us about OneStop Shop.
Okay, thank you, Elspeth. So the one-stop shop. As a seller, you can now opt to file a single VAT return for the whole of the EU, and that will cover all your sales to all those countries. The big advantage to that is that you would otherwise need to register for VAT in every country in which you have customers. So merchants can use the OSS to file and remit VAT for it. Well, basically, you can choose the country that you register in, and as long as it's not their home country or a domestic supply in a country where they have a physical location or hold stock. In this case, they would need to continue to file a local return. So what we had previously was the existing mini one-stop shop, which was purely for digital services. And that was a simplification scheme that was really necessary because there were no distance selling thresholds in respect of digital services. So you would have to have registered in all the countries in which all the EU countries in which you had customers if you were selling digital services. And the new one-stop shops, the new one-stop shop schemes are really an expansion of that existing scheme. It expands it to all services and also to goods. Other changes that have also been made, all effective on the 1st of July, as far as the EU is concerned, is that low value consignment relief was abolished. It was actually abolished in the UK on the 1st of January. That was a concession whereby you could import goods into the UK that had a value of less than £15, or into the EU of less than €22, and you would not have to pay any VAT. And that was something that was used by dropshippers significantly. You could literally sell millions of pounds worth of products and never have to register for VAT and never have to pay any. The distance selling thresholds were also abolished, and that meant that you could no longer include sales to other EU countries on your home VAT return if you were below those thresholds. Those thresholds just disappeared. So in the same way that we didn't have any thresholds for digital services, there are now no thresholds at all throughout the EU. So where would we be without the one-stop shop? Well, as I've already alluded to, the options would be that you would have to register for VAT throughout the EU. If you were selling to all the EU countries, that would obviously be a very significant obligation and very costly. The alternative is to deliver DAP. Basically, that means that the customer is responsible for the VAT and any duties that are applicable. And some businesses do make this work quite successfully. Obviously, it needs to be very clear on your website that to your customer that they may have additional amounts to pay when they receive their goods. it works for some, and other people will prefer to use the one-stop shop and completely avoid the need for the customer to have anything further to pay. So there are 3 different one-stop shops. The first one is the Non-Union Scheme, and this is for businesses that have no establishment in the EU that sell B2C services. So it's basically the mini one-stop shop for digital services, now expanded to all types of services. You can choose in which country you wish to register. The Union Scheme is for businesses that do have an establishment in the EU. You can choose to register where you have multiple establishments throughout the EU, but generally speaking, most businesses would only have one, and that would be their place of registration. There are no value limitations on the value of the goods, but you still do need to register in jurisdictions where inventory is stored. So it's not necessarily the case that you will only have one VAT registration in the EU. You still might have multiple registrations. For instance, if you're using the Amazon FBA Pan-EU program, you're still going to be storing inventory in France, Germany, etc., and you'll still have registrations in those countries. The third scheme is the Import One-Stop Shop, and those are for businesses with no establishment in the EU that sell. That's not what it's incorrect what it says there. That sell B2C, not services but goods. You can again choose where you register, but this is limited to consignments of up to 150 euros of intrinsic value. So what do we mean by intrinsic value? Well, if, for example, you sell a product for 140 euros and you add a 15 euro shipping charge, then the intrinsic value of that sale is 140 euros, and you would be able to include it on your import one-stop shop return. If, however, you sold that same product with free shipping but sold it for 155 euros, then it would be above the limit and you would not be able to include it on your import one-stop shop return. One of the slight drawbacks to the scheme is that you must have an intermediary appointed in whichever country you choose to register. So there is a slightly additional cost to that scheme. Just going back to the Union Scheme, for example, let's say you have a one-stop shop registration in Germany, but you also store inventory in France. You would have your one-stop registration, you'd have your German registration, you'd have your French registration, and your sales that were fulfilled from Germany to German customers would go on your German VAT return, but then your other sales fulfilled from Germany to the rest of the EU would go on your Union one-stop shop return. And then your French sales outside of France would also go on your one-stop shop return. So you can have a situation where some sales are on your one-stop shop return and some sales are on your domestic return. It's actually also possible that you would actually use all 3 schemes. If you were established in the EU, you would not use the non-union one-stop shop because that's for businesses not established in the EU. But if you were outside the EU, it is feasible that you would be selling services and using the non-union scheme. You might also fulfill some of your products from within the EU by storing your inventory in the EU and fulfilling from there, in which case you would use the union scheme. But you also might fulfill some of your sales from outside the EU, in which case you would use the import one-stop shop. Another point to note is in terms of when you register. If, for instance, you were to make an application today, the registration would only be effective from the beginning of the next quarter, being the 1st of April. If you have, however, started to make sales before then you can still include them on your first one-stop shop return, provided you inform the relevant authorities by the 10th of the following month in which you start to sell. If you don't do that, then what you're meant to do is to report those sales on a VAT return for a registration made in the country where you have made those sales. So you really do want to avoid that completely. So moving on to dropshipping, as I mentioned before, low value consignment relief was abolished in the EU on the 1st of July, in the UK on the 1st of January. And that was something that a lot of dropshippers took advantage of. That is now a completely different situation. There is a requirement to account for VAT at the point of sale, provided that the sales value of that product is less than £135, or in the EU, 150 euros. If it's more than that, then it would need that dispatch will need to go through customs and VAT paid at the point of entry, and you would not normally either have some arrangement with your carrier where they would pay the VAT for you and the duties and then re-invoice you, or again you would send it DAP. But if it's under those thresholds, then you have to account for VAT at the point of sale and include those sales on your VAT return, whether it's in the EU or the UK. So if there's a lesson to be learned from that, is that any business model that relies on a tax loophole, which this was effectively, is likely to face a significant change at some point in the future when that loophole is closed. So VAT postponement. When you import product into a country, you pay import VAT. And in the UK, there is a system of postponement. So rather than paying that import VAT at point of entry, you can now postpone that VAT and account for it on your VAT return. Now that means that, but the advantage of doing that is really just a cash flow issue, because you're not paying out and then reclaiming it, which could be several months later. So it just goes on your VAT return as it goes in with your sales VAT as if you're going to pay it to HMRC, and then you also reclaim it on the same return, and the two entries just cancel each other out. There is, however, an advantage to postponing VAT if you're using the flat rate scheme. Now, some of you may not be aware of what the flat rate scheme is, but that's a simplification scheme for small businesses with a turnover of less than £150,000. And unlike the standard scheme, you don't reclaim any VAT at all, but you pay VAT at a fixed percentage of your turnover, and that percentage allows for the fact that you're not actually reclaiming any VAT. So for an e-commerce seller, that would typically be 7.5%. So if you are using the flat rate scheme and you are postponing VAT, let's say you have import VAT due on a container, and that import VAT is £10,000. If you don't pay that VAT, then and it's postponed, then at the moment the VAT is added to your flat rate turnover. So what you would then pay is 7.5% of £10,000, which is 750. If you had paid that VAT, it wouldn't go on your VAT return at all, because on the flat rate scheme, you don't repay anything. And therefore, the cost of the business of that import would have been £10,000. So you're actually saving £9,250 in that example. The bad news is that, like all loopholes, it's being closed, and for VAT returns that quarters that start on or after the 1st of July, the import VAT will go in box 1 on your VAT return, which means you will be paying the full £10,000. And now I think I'm handing you back to Elspeth.
Okay, so one thing that we also should talk about with VAT when it comes to selling online is the new VAT package and the implications for online marketplaces. So this is quite important for sellers to know, especially if you're selling on multiple platforms. An important distinction when handling EU VAT since the 1st of July with the new VAT package is whether the sales platform is considered to be a true online marketplace or not, because not all of them are. Online marketplaces are required to collect and remit the VAT on behalf of sellers in a number of circumstances. An example of that, Steve touched on it, is if a consignment is less than €150 and shipped to an EU country. However, not all the online platforms are considered to be OMPs by the EU authorities. Some examples of OMPs are Amazon, Etsy, and eBay, but Shopify is not considered to be an OMP, and it's really important to keep that in mind if you're selling on Shopify. Since the 1st of July, Shopify will collect the VAT at the rate of the EU arrival country that you've sold to, but they don't remit this on your behalf. So as a seller, if you're the seller, then you are responsible for reporting and submitting the VAT to the relevant authorities, or potentially doing a one-stop shop return for any EU sales. Now, we want to really quickly touch on some solutions to help you. We don't want to major on this in this webinar because we really want to talk about VAT and maybe answer some questions at the end. But we are just going to touch briefly on A2X, particularly around its VAT features. And we're going to chat a little bit about e-commerce accounts as well and how that can help. So I think in just a second, a slide is going to come up with a Shopify settlement. It's a typical Shopify settlement that's hit your bank account. If you sell on Shopify, you'll be aware of this. Every few days you receive a payout from Shopify for a total amount, quite a mysterious amount, because we know that actually at the end of the day, that total that hit your bank account is actually made up of many different types of transactions, sales, shipping income, VAT. If you're selling across the EU, it could be VAT collected at various different EU rates. You can have gift cards, pending payments, and all of that creates that total that hit the bank account. And we see sellers deal with that in various different ways. One option we see quite often is that people would just reconcile that to sales. Of course, that's going to be understating or overstating the revenue, potentially missing quite a lot of the VAT, and causing various issues on your P&L usually. Another option, obviously, a lot of people would do a manual. They would manually account for that in the accounting system, but that can be quite time consuming and error prone, and potentially quite expensive if you're paying your accountant and bookkeeper to do that for every single payout. So at A2X, we do like to offer you a solution to that, which is our A2X integrations. At the moment, we connect with Amazon, Shopify, eBay, Walmart, and Etsy. So if you're selling on all of those platforms or one or two of them, we can handle your accounting. Our goal is always to give you a really accurate reconciliation back to the amount that hit the bank account. And we currently have direct integrations with Xero, QuickBooks, and Sage, but we also offer some manual integrations with other accounting systems if you need that. So basically, I'm not going to go into loads of details because we want to get back onto the topic of VAT, but we'll basically take all of your unstructured data, accurately break it down in your chart of accounts, give you a nice P&L and a balance sheet, and then reconcile it back to your bank account, usually with one click. Now, I'm from the EU team at A2X, and we talk about VAT all the time. Our customers are always asking about VAT. We have many EU customers and accountants and bookkeepers who are using A2X across the EU. So our solution, we spend a lot of time making sure that we can handle various different VAT situations for our customers. We can handle basic accounting data before you're VAT registered. We can handle it once you're UK VAT registered, and we can split VAT by product type if you've got 0 rated and standard rated products, but also by destination if you're selling to various places in the world. Once you grow and you start selling right across the EU and potentially storing goods in multiple warehouses, then we can start to customize your setup to allow registrations in multiple EU countries and to split your data out so that you still have accurate numbers on each one of those jurisdictions. One of our latest setups that we're doing a lot are our Shopify OneStop Shop setups. This is really helping some of our Shopify customers because they're not an online marketplace. But they are collecting VAT. If you're selling into the EU, then we actually have some custom features where we can split that out for you, and you could even submit your own one-stop shop return for Shopify based on those numbers if you wanted to. One last handy feature I'm going to talk about, and then we'll move on, is our marketplace facilitator VAT transactions for Amazon EU sales. This is really helpful for sellers on Amazon because Amazon, in certain circumstances, but not all, collect and remit the VAT for you now. And what we do at A2X is we split out those transactions for you so that you can 0 rate them, and that avoids you overpaying on the VAT side. And it's a really handy thing, particularly for our Amazon sellers since the 1st of July. Another thing we like at A2X is we like e-commerce accountants and bookkeepers. Business accounting obviously is one thing. E-commerce accounting is a whole different scenario. The basic principles of accounting obviously remain the same, but there are some fundamental differences. And there are a few reasons why it's definitely worth considering using some of these software solutions to streamline your processes at the same time as finding a really good specialist e-commerce accountant. Obviously, we've been talking about VAT today. EU VAT compliance can be confusing and complex, but a good e-commerce accountant who's familiar with the EU will be aware of those requirements and they'll be able to point you in the right direction. We see a lot of sellers with quite complex inventory management requirements, especially if they're selling on multiple platforms, and that can require quite specialist expertise. So whether you're storing in an Amazon warehouse or maybe a mix of Amazon and your own warehouse, it's an important part of accounting for all of your sales and what's going on in your accounts, basically. E-commerce often entails a large volume of transactions. We see sellers grow their businesses from their garage to large operations with big warehouses. And quite often that happens quite quickly. And so your accountant needs to be comfortable with handling those kind of fast-moving and large volume sales as you scale up. Prepare to scale up if you're going to sell on an e-commerce platform. And the last thing, I guess, is the reporting side of things. A good e-commerce accountant or bookkeeper will be able to provide you with really good regular reporting on your profitability. It should always be in an easy to understand format and tailored to your particular sales platforms. And this just enables you to make really good decisions going forward. So basically, e-commerce accounting is complex, and the complexity tends to increase as you grow and sell in more jurisdictions. And so, small, medium-sized businesses really do need an expert accountant or bookkeeper who knows about e-commerce, because it will help you to solve those issues that come with complexity, and also to just give you better financial visibility, really. I'm going to hand over to Chris now, who I think is going to tell us a little bit about Merchant Spring.
Thank you, Elspeth. Hello again, everyone. So before we go to the question and answer section, we've got a couple questions in over the course of the registration period. I want to let you know a little bit about the Merchant Spring tool. So we have more than 15 modules that brand managers, account managers, marketplace managers, and all of the above use to update things like Amazon buy box pricing, suppress listings, also to generate Amazon P&L reports on the store and product level, and client reports as well. So wanted to give an offer to those folks on live for the webinar, and also those folks who will be watching recording of the webinar. If you're interested in having a demo of the platform, a 20-minute demo, and taking us up on a 14-day free trial of the platform, I will be sending a link in the email with the recording link in it that will have a booking link as well. So if you want to take us up on that offer will be available until March 15th. So that email will come out here shortly. So we can now move on to the question and answer section, I believe. And we had a couple questions. By the way, if you're on live with us, please feel free to send in a question or two if you have them. Let me see what we do have here. Okay, so it looks like where are we? Looks like there's a question on VAT tax collection and remittance on Amazon. Elspeth, did you want to take that on? I can bring you on here as well.
Sure. What we're seeing since the 1st of July is that Amazon, in some cases, but not in all cases, are collecting and remitting the VAT on some sales. And the great thing about Amazon is that they do split it out for us. So we can normally see, particularly if you use a tool like A2X, you can see your marketplace, what we would call marketplace facilitator VAT. That's where the OMP has been required to collect and remit VAT on your behalf. And the important thing for sellers just to know about that is that splitting it will reduce your overall VAT liability rather than just treating all of those sales as VATable and submitting the VAT twice effectively. You are permitted to treat those as zero-rated supplies to Amazon in a way, and that will reduce your VAT bill somewhat, being able to split those out.
Gotcha. Let me see what other questions we have here. I had these up before. So there's another question here, and it's a longer question, so I'm just going to rephrase it. So how do you go about registering for VAT in the UK if you're not currently in the UK? I'm going to bring Steve in as well and let you guys just take that.
Okay, so the process for registering for VAT in terms of the initial application is actually identical whether you're in the UK or not. It's an online application. There are a number of questions to answer. The difference is that if you're a UK business, that application will probably get processed. At the moment, it's within a week. If you're a non-UK business, you'll almost certainly get some follow-up questions. The other difference is that on that initial application, you will have to provide forms of identity, the usual kind of thing. Is in the same way that if you open a bank account, you have to provide a passport or a photo driving license and proof of address, which they don't ask for UK businesses. But the follow-up questions is quite a lengthy questionnaire. It will ask information about where you're going to store your product, how you're going to fulfill it, what arrangements you have to actually sell your product, and they want to see evidence of contracts and agreements. And once you've provided all that information, it's probably going to be at least a month before you actually do get your registration.
Got it.
I did actually have something else to add about postponed VAT that I forgot to mention, what I might as well mention now, because we only really talked about postponement in the UK, and the UK is probably ahead of the game in respect of postponed VAT. When you compare it to a lot of the other EU countries, postponed VAT has been around since 1st of January 2021. France recently, from 1st of January 22, also introduced postponed VAT. And actually, unlike the UK, where it's completely optional. They've made it compulsory if you're VAT registered in France. The Netherlands, where a lot of companies will reroute their product into the EU through the Netherlands, they also have a system of postponement, but it's not as simple and straightforward in terms of the registration process. You need a license to do so, and you need local representation. And you might think that, given that it's only a cash flow advantage, is it really worth it if you've got to jump through more hoops to do so? But what we're actually seeing is that some clients are having actually difficulty in reclaiming the import VAT that they paid because they didn't postpone, and the Dutch authorities are making them jump through hoops to get their VAT back. And it's also delaying that process and taking many months when it should have been a matter of weeks. And with each successive import not getting that VAT back, the amount that's due is building up, and it's becoming a major issue for some businesses. So despite the fact that it's there's more of a process to go through to actually get that license and get that local representation, I would absolutely encourage anybody that's importing through the Netherlands and currently paying import VAT to do so.
Got it. That's great. Excellent. Well, we'll wait another minute or so. If anyone on the live has any questions, please feel free to send them in the comment box now. We'll give another minute or so. And if not, we'll go ahead and give you 22 minutes back. As I mentioned, just to wrap up here, you'll be receiving an email after this webinar, and anyone who registered, which will include a link to a recording of this webinar. It will also include a booking link for the Merchant Spring special offer that I mentioned before. All right, looks like that's all the questions that we have at the moment. So please check your inbox for an email with that webinar information. We hope you all enjoy this webinar, gain some valuable insights. And we thank you all once again for joining us and look forward to seeing you at our next webinar, which will be live in a few weeks' time. I hope you all have a wonderful day.